Good afternoon, and thank you for inviting me to talk about open banking, which has been a very important part of my daily work as a CTO of Yes and an open banking scheme, and also of my work at the Fabric Working Group at the OpenID Foundation. The slides aren't shown right now. What does open banking basically mean? Open banking, in the end, is kind of open data, if you like. So open banking, the philosophy means that a customer is able to use her data that it maintains with a financial institution, such as transaction data, account data, and so on, to use someplace else, for example, in an external app, to perform various use cases. And open banking has a long history in the European Union, and I think even abroad. We are back. We are back in game. Thank you very much. Open banking in the European Union is associated with the term Payment Service Directive 2. I'm gonna explain what this directive is all about in a couple of minutes, but let me start by explaining what open banking meant in the European Union before this directive was issued by the European Commission. Basically, there are several use cases in open banking that we saw in the market in the last, I would say, 20 years. First of all, people used applications to manage their complete financial situation. That's called personal finance management. Second, there are services, or were services, that provided payment instruments that people were able to use in, for example, e-commerce scenario that were based on a, for example, credit transfer. And there are services also in that context that used account information to assess the creditworthiness of users. So when you check out at at a merchant e-commerce site, you are potentially offered to pay by invoice if your creditworthiness is beyond a certain threshold. And credit rating based on that data is clearly also used if you are applying for a loan. And if you're applying for a loan, you typically also need to verify or provide your identity due to anti-money laundering regulations. And this is the fourth use case that we can see in an open banking scenario. Before PSD2 in the European Union, the predominant technology to access this kind of data and services was screen scraping. May I ask you, please raise your hand if you ever heard about that term, screen scraping? Yeah, okay, thank you very much. I learned in the morning, and I kind of also know that, I think, that screen scraping is also used in Japan. It basically means that a website, an HTML interface, that's intended to be consumed by human being is used by machines, right? So they behave like a user, receive the HTML, and then parse the HTML and extract the data to be then used and processed in the application. And this technology clearly has some significant limitations. It's very fragile, because as soon as the bank changes the user interface, for example, and adds a new service or new menu item or something like that, the code breaks. And you have to change that code. That's also a reason why it's very expensive to integrate with financial service or any kind of service using this kind of API. I mean, clearly it is not made for that purpose. But there is also a security issue, because typically in that scenarios, the third-party application that behaves or pretends to be a user also gets your credentials, gets the credentials of the bank customers, which is a really, really tremendous security issue. There has been different or other alternative technologies in the past already. So for example, in Germany, there is a well-defined interface which is based on HTTP and XML. It's called Home Banking Computer Interface. But it's always been a very local technology. So for example, in France or in the UK, there is no such an API. And based on everything what I said, it does not come as a surprise that there were several really serious issues with open banking in the European Union in the past that caused the European Commission and the European Parliament to come up with that Payment Service Directive 2. Most notably, it was about liability. Because in the scenario I just described, suppose you've got a third-party app that parses your website, takes your credentials to do something on your behalf, and then someone steals money from your account. So what's going to happen? Who is liable for that? Is it the third party? Is it you as a customer? Is it the financial institution? This caused a legal uncertainty, and there were even lawsuits around that and antitrust cases in Germany, for example, because banks prohibited their customers to give their credentials to third parties, and the third parties in turn raised those cases with the antitrust agency or authority because they wanted to continue to provide the services to the customer. So this was one of the main reasons why the European Union decided we're going to regulate that area, and that's why they came up with the Payment Service Directive 2. The Payment Service Directive 2 basically obliges any financial institution operating in the European Union to provide access to account information, meaning your accounts, balance, transaction history, and so on. And it also obliges those financial institutions to provide payment initiation access through APIs to authorized third parties. What does that mean? Not any application or website is allowed to use those APIs. There is a high entrance barrier, because anybody, any third party that wants to access those APIs needs to register with the local national competent authority, for example, the FCA in the UK, and then gets a license. And the aim of that is to really put that third parties under the regulatory umbrella of the financial industry. Looks good from first sight, but creates a lot of obstacles and causes cost and complexity to anybody that wants to interact with those interfaces. That's a downside. All right, beside this kind of API access, the European Commission also decided to force any financial institution to implement what they call strong customer authentication. It's a new term. What does it mean? Basically, multi-factor authentication, right? So multi-factor authentication for all kind of access to account information and for payment initiation. And the specialty here in that case is that the legislation also obliges the financial institution to really link the API request for initiating a payment and the consent that the user has given via SCA in terms of amount, currency, and recipient of the data. So it's a really tight coupling between the authorization process and the execution of the payment. And the intent of the whole regulation is, first of all, to establish a regulatory regime and to clarify the liability topic, but also to increase security and foster innovation. If more people, if more third parties can build services on top of financial capabilities, that's good for the innovation in the market. And another objective is to reduce payment costs. So if things are standardized and intermediaries can be removed, cost for payments should go down. From an execution perspective, PSD2 is a from my perspective, very, very impressive initiative because of the structure of the European Union. The European Union is a union of 28 member states. All those member states are independent. So one of those states is Germany, where I come from, or France, or Austria, and still the UK. Sorry, I had to make that one. And what does it mean for the implementation of PSD2? So the European Commission issued that PSD2 directive with additional technical requirements. And then the 28 member states needed to transpose this directive in their local law, which means Germany, for example, extended the local Zahlungsdienstegesetz. That's the name of that law. And other countries transposed that in new laws or codes or adopted existing ones. And most of those member states also started to define technical standards because there was no pre-existing technical standard for that kind of services. And then all the banks had to implement that. Question to the audience. Anyone in the audience knowing how many banks, how many financial institutions exist in the European Union? Just a guess. How many? Multiply it by 6 and you're right. So it's 6,000 banks. It's a quite impressive number. Don't ask me why we need 6,000 banks. I don't know. But they are there. And all of them had to implement those API. And this is crazy, right? Because this had to be done within 18 months. From the text of the legislation to the go live of those APIs. And we will see what the current status is. And we as an OpenID Foundation were part of that activity. At the OpenID Foundation, there is a working group called the Financial API Working Group. And we developed a profile of OpenID Connect and OAuth to be used for secure API authorization. And we also helped some of those initiatives to get the security and authorization piece of those APIs right. And that's basically the source of the experience I'm sharing with you today. The current status is we are in a transition phase. Although officially PSD2 is effective since September 13 last year, we are not done yet. So for me as a customer of a German bank, for example, right now I'm unable to use PSD2 based applications because most banks don't have so far gotten the approval of the national competent authority to really use that APIs and turn down any kind of screen scraping. So that's a transition phase. I assume it will take another year or so. And there are discussions about the scope because there were pre-existing third parties that screen scraped bank data and implemented the use cases I just mentioned. And the PSD2 APIs do not support all those use cases. So for example, identity is not in scope for PSD2, which also means some of those TPPs now are facing the problem that they potentially cannot really further provide the use cases to the market. And the third is introduction of the secure, the strong customer authentication, the multi-factor authentication is much more complicated than expected. I mean, financial institutions providing online banking access to their customers don't have that much of a problem. They needed to get rid of so-called static second factor based methods, but they were anyway in the process of getting rid of them. But credit card schemes have a real problem because most credit card customers in the European Union don't have a second factor to really authorize credit card transactions in e-commerce scenarios. And that's why a transition period until end of this year has been approved by the authorities. And from a technical perspective, I think it doesn't come as a surprise after you have seen what a what a complex mess that is, that we don't have a real interoperability in the market right now. So I would assume that not two banks are implementing the same API. So I talked to TPPs and they are getting crazy about what they need to do in order to really implement the interaction with all those different banks, not only from a technical perspective, but also from a functional perspective. So I think it will take some time to come to more interoperability, and I think that's really needed to foster interoperability. We as an OpenID Foundation are also contributing to that. There is an initiative under the SWIFT umbrella to align some of those API initiatives, and we have been invited to contribute the security profile for that, and we are really honored by that, and are really looking forward to contribute what we can to really help to come up with interoperable and secure solution in that space. So, looking forward, what could we see or will we see or should we see in the market going forward? One has to admit there are different parties in that game, and they have a completely different perspective on what the next steps should be beyond PSD2. Most merchants are looking primarily onto PSD2 from a payments perspective, and what they want to see are more sophisticated payment services that they can use to explicitly address their needs, for example, deferred or guaranteed payments. The regulator, the European Banking Authority, has a completely different plan, because now that we have all those APIs in place, they would like to implement a EU-wide payment scheme. So one has to understand that in the European Union today, there is no EU-based payment scheme. Most card scheme or account-based card schemes are country-specific, and the credit card schemes are run by US American companies. And it's a question of sovereignty from a European Union's perspective to come up with their own EU-wide payment scheme. That's what they are working on. And traditional TPPs, as I just mentioned, want to see more access to more data and more functions, right? The problem from the financial services or financial institutions perspective, right now, everything I told you about is free of charge. So any TPP that manages to be authorized to access financial services or financial institution APIs can obtain the data and use the payment initiation services completely free of charge. And financial institutions have invested a lot of money into implementing this, and they are looking for a business case. I think that's totally understandable. So the question is, what kind of service or capability are third parties ready to pay for or will to pay for? Because that in the end might be the foundation of some sustainable approach going forward. And our experience in the market as a operator of a commercial open banking scheme is that identity is a very important topic. Strong identity where third parties are willing to pay, and I will dig into that topic now. So first of all, why is identity important? I think that's a rhetorical question given Kim's talk, for example, in the morning. I mean, a digital society cannot really exist without identity. And there are use cases where the typical social identity isn't sufficient to really identify users. And I've listed some of those use cases on the right-hand side. So anti-money laundering is one use case. Counter terrorism financing, telecommunications acts, health data is a very sensible area where you really want to make sure that you're really exposing data only to legitimate users, and so on. But even for a mom and pop shop, it's so totally important. If you want to sell alcohol on the internet, you want to make sure that you're gonna don't not sell that to kids, right? And question is, how can banks help? And from my perspective, they have some capabilities that are unique. There is no other industry that has this combination of capabilities. First of all, financial institutions are obliged to verify everybody's identity once this person applies for a loan or opens a banking account. And this is more or less harmonized across the globe, first of all. Second, this data is bound to an online identity, at least for the most users. So most users have access to mobile banking or digital banking and have credentials, multi-factor credentials, that they can use to authenticate themselves. So multi-factor authentication plus verified user data is what you really need to do strong identity attestation. And we don't talk about user lifecycle management because this is really something where people tend to get gray hair. So leveraging those assets to third parties is one opportunity to provide new services for the existing customers and to create new revenue streams. For example, what banks can do is they can offer authentication as a service to start with. And whoever tried to manage a two-factor authentication scheme knows what it really takes, including recovery, for example. The obvious option is to provide high-level identity assurance for the before-mentioned use cases, but there are further data that might be interesting for third parties, such as your credit score. Nobody knows your creditworthiness better than your financial institution. And clearly, that should always happen with the consent of the user. That's a prerequisite. That's the fundamental philosophy, right? All right. Given that most of the initiatives that I just talked about are based on OAuth, to use OpenID Connect as a technical means to transfer, to convey that data to relying parties is an obvious choice. Because OpenID Connect, and Mike told about that in the morning, is an identity layer built on top of OAuth. So the both are integrated very, very nicely. But there are challenges with the way OpenID Connect works right now when it comes to strong identity assurance. First of all, there's lack of reach. All right, we're going to solve that because we turn all the banks, all the financial institutions in the European Union and worldwide into IDPs. Okay. And the second is lack of interoperability. And this is more a subtle lack of interoperability because, yes, all OpenID Connect implementations can attest you the name and the given name and the address of a person. But you don't know as a recipient how this OP verified those claims for that person. There's a process involved, typically a trust framework. You potentially verify the ID card or the passport, something like that. And as a recipient in a high assurance use case, you need to know what the OP did to verify that. And I mean, Kim pointed that out in the morning, right? A claim is just, yeah, you claim to know something about someone. And implicit attestation lacks further information that you as a recipient can use to do your own assessment whether you trust that particular claim. And we're going to address that in a new module that we are defining at the OpenID Foundation. It's an extension to OpenID Connect, and it's called OpenID Connect for Identity Assurance. Naruhiro and I are co-chairs of the working group that implements or defines that a specification. And if you happen to have questions, just approach us after the speech. And clearly, this extension is not only intended to be used by financial institutions. It's a general purpose, high assurance identity extension to OpenID Connect and can be used across the board by other industries. Since I'm running a bit out of time, all right, yeah. What the identity assurance draft does, it more or less extends OpenID Connect with what I call the explicit attestation. So the relying party is not only provided with the claims about the user, just such as the name and the address, it's also provided with metadata. Who has verified the person? Using what method? What ID document or other document has been verified? When did it happen? Is there a transaction ID I can use in case of a dispute, and so on? This is the set of data that we are providing the relying party with. And just to give you an impression, that's how that looks like. Let me quickly check. No. So this is how it looks like when you get an assertion based on OpenID Connect for identity assurance. There is one piece that is called verification, and that's where all the metadata go that you as a relying party can use to do your own risk assessment and to decide how you map the claims that you receive from the IDP to your own legal framework. Because typically what we see is the IDP, for example, the bank, is obliged to follow one framework, for example, anti-money laundering. And the receiving end, for example, is a telecommunication company, ruled and governed by the Telecommunication Act. And you need to map between those contexts. And that's how a, for example, user info response looks like in OpenID Connect for identity assurance, using the concepts I just explained. So for example, in the upper part, we see the usual and pre-existing claims such as sub and email address. And then we have a new concept, a container called verified claims. And that container nicely packages the whole package, or frames the whole package. We've got the claims themselves, and they are clearly set in a relationship with the verification and metadata that you can use to, in the end, process those data. The specification intentionally, and that's true for all specification that we do at the OpenID Foundation, is intended to be an international specification. And this is especially difficult in that scenario, in that area, because high-level identity assurance is highly, highly dependent on jurisdictions and even cultural differences. So for example, the way identity is historically handled in Canada, UK, US and Australia is completely different than continental Europe, right? Where we have government-run registries, for example. And I have to admit, I don't know how this works in Japan, for example. But we have people in Japan that have contributed to the development of that specification to make sure that the technical specification that we write is able to also work within the boundaries of the legislation in Japan. And we are hoping to get more feedback from Japan, but also from other countries, to make sure that the technical specification, which is independent of any legal stuff, works across the globe. And that's why we have set up that working group. The initial contribution for that specification was provided by yes.com. We have implementation experience with banks in Germany. And the working group has been set up in January. What I would like to point out is there is a workshop next week on Tuesday where we talk about OpenID Connect for identity assurance. There's a face-to-face meeting of the working group. So if you are interested to learn more about that module, if you want to contribute to that workshop, just approach me or Now Hero after the talk. And with that, I would like to close my speech. So there are a lot of other topics you could talk to me about. So for example, if you want to know more in details about OAuth security in general, I'm also the editor of the OAuth 2.0 security current best practice. and of some other interesting modules, just talk to me. I will be around all day. Thank you for your attention.
ありがとうございました。